I'm going to show you how to combine the 50 EMA with the Aroon Indicator on a 15-second chart to find high accuracy, 1-minute entries on Pocket Option. If you want to see exactly how to catch these flips, watch this video until the very last second. Let's dive in. Before we jump into the settings, remember that trading involves risk. This strategy is for educational purposes to help you understand market momentum. Never trade money you can't afford to lose. Now, let's build the engine for this strategy. Go ahead and open your Pocket Option chart. First, we need to change the chart type to candles and set the time frame to 15 seconds. This is a fast-paced strategy, so we need that granular data to make quick decisions. Next, set your trade expiry time to exactly 1 minute because we are essentially scalping the momentum here. Now for the indicators. Go to your Indicator tab and select the moving average. Change the period to 50, keep it as an EMA, and make the line thick so you can't miss it. This is going to act as our trend filter. Next, search for Aroon. We are using the default settings, which is period 25. Just make sure your visual settings are clear. Usually, Aroon up is blue and Aroon down is red. Before we take a trade, you need to understand the secret sauce here. Why are we using Aroon? Most of you use moving averages for crossovers, but moving averages lag. The Aroon Indicator is sophisticated. It measures how recently a high or low occurred. Think of it like this. The EMA tells us the direction of the river, while the Aroon tells us how fast the water is flowing. When we combine them, we don't just guess where the price is going. We know exactly when the momentum is strong enough to push it there. So, here are the strict rules for the Aroon flip. To take a buy trade, first check the filter. Price must be clearly trading above the 50 EMA to ensure we are in an uptrend. Then, look for the trigger on the Aroon. We are waiting for the blue line, which is Aroon up, to cross above the red line. As soon as that crossover happens and the candle closes, we take a 1-minute trade up. For a sell trade, we do the opposite. The price must be trading below the 50 EMA. For our trigger, we wait for the red line, or Aroon down, to cross above the blue line. This tells us sellers have taken control of the momentum, and we enter a 1-minute down trade immediately. However, knowing the rules is one thing, but seeing it live is where you actually learn. I'm going to show you a few raw examples of this happening right now, and I'll point out one common mistake that ruins this setup for beginners. You definitely don't want to miss that. Now let's apply the theory to a live market scenario so you can see exactly how fast this happens. I want you to focus on this setup right here. First, my eyes go straight to the white 50 EMA line. The candles are forming clearly below it, which tells me the overall trend is bearish and I should only be looking for sell trades. But a downtrend isn't enough. I need the specific timing. Look down at the Aroon Indicator. I waited patiently until I saw that sharp movement where the red Aroon line crossed aggressively above the blue line. That crossover was my green light, signaling that selling momentum just kicked into high gear. As soon as that candle closed, confirming the cross, I entered a lower trade for 1 minute. As the trade moves forward, watch how the price reacts. Notice how the candles are dropping heavily red. This happens because the Aroon indicated that the freshness of the low price is very strong. The sellers are active right now, and just like that, the trade expires. We secure a clean, deep winning result. Now, I promise to show you the one common mistake that ruins this strategy for beginners. I want you to pay close attention to this specific trade because understanding this loss is more valuable than seeing 10 wins in a row. Look at the setup. On the surface, it looks perfect, right? The price is trading below the white 50 EMA, indicating a downtrend. Down here, the red Aroon line has crossed above the blue line, signaling selling momentum. So, following the basic rules, I entered a lower trade, but here is the trap. I ignored the context of the chart. If you look to the left, we are slamming right into a strong support level. I essentially tried to sell right into a concrete floor. As the trade progresses, you can immediately see the problem. Even though the indicators said sell, the price action is telling a different story. Notice how the red candles stop dropping? They hit that invisible wall, the support level, and start to shrink. We are seeing rejection wicks and small green candles appearing. This is the market telling us that the sellers are exhausted and buyers are stepping in to defend this price. The Aroon measures momentum, but it cannot see support and resistance levels. That is your job as a trader. And here is the result. The trade expires out of the money. We took a loss. The price bounced exactly where that support level was waiting. The lesson here is critical. Never trade blindly based on indicators alone. Even if the Aroon flips and the EMA is perfect, if you are staring at a brick wall of support, do not take the trade. Skipping a trade like this is just as good as winning one because it protects your capital for the next high-quality opportunity. Let's look at a textbook execution where patience pays off. I want you to ignore the noise and focus purely on the structure of the market in this specific moment. First, look at the white 50 EMA line. The candles are clearly falling away from it, which confirms that the bears, the sellers, are in total control. But we never jump in just because the price is dropping. We need a precision trigger. I watched the Aroon indicator at the bottom like a hawk. The moment the red line crossed aggressively above the blue line, it told me that the downward momentum was fresh and powerful. As soon as that crossover was confirmed, I executed a lower trade immediately. Now this is the part where most beginners panic, and I want you to watch closely. As the trade moves forward, the market takes a breath. You can see a small green candle trying to push back up. This is completely normal. Market momentum isn't a straight line. It breathes in and out. Because we are trading with the dominant trend, below the 50 EMA, and with the momentum from the Aroon, we don't need to stress about these small pullbacks. We trust that the gravity of the trend will pull the price back down before our time is up. And exactly as predicted, the sellers flood back in. Look at that drop right at the end. Now, let's flip the script. I want to show you how this strategy handles a complete change in market direction. This is where most traders get scared, but where we get aggressive. Look at the chart here. The price had been struggling at the bottom, but suddenly, we see a surge of energy. I'm watching two specific things happen at the exact same second. First, the price candles punch powerfully through that white 50 EMA line. That's our alert that the buyers are waking up. But I don't trust the candles alone. I look down at the Aroon. The blue line shoots straight up to 100, crossing above the red line. This is the mathematical confirmation that the up momentum is now stronger than the down momentum. I don't hesitate. I enter a higher trade immediately. As the trade plays out, watch how the 50 EMA changes its role. Before, it might have acted as a ceiling, but now that we are above it, it acts as a concrete floor. You can see the green candles forming confidently. This isn't luck. This is the Aroon indicator doing its job. Because the blue line remains pinned at the top, it tells us that buyers are hitting new highs every few seconds. We aren't just hoping the price goes up. We have data telling us that the buying pressure is intense and active right now. And here's the payout. The trade closes comfortably in the money, significantly above our entry point. So, there you have it. The Aroon flip isn't magic. It is simply the discipline of waiting for time and price to align. Today, you saw exactly how to catch the perfect reversal, how to ride a strong trend, and most importantly, you learned how to spot the support level trap that wipes out beginners.